It's just negotiation. They'll get somewhere sensible. Chinese will end up buying treasuries. They will stimulate their economy. They will help stimulate the global economy, and others will do the same. It is all fine. It's all working according to plan. And those of you who think it's not, Bitcoin hit an all-time high today. So of course it's going to plan, but your alts aren't yet. And so therefore you are miserable. And that's because you've made the wrong selection so far. Some of them have done really well, and we'll come on to some of the charts in a bit. But generally speaking, the space looks amazing right now.
Hey guys, welcome to Everyday Finance. A robust rally has resulted in an increase of more than 30% in the value of Bitcoin during the second quarter, and it has been experiencing growth for 7 weeks in a row. The market, on the other hand, is beginning to show signs of cautionary indicators virtually everywhere. On the basis of long-term patterns and technical indicators, it is possible that the bullish phase that we are currently experiencing is drawing to a close. Following the cryptocurrency's return to its previous all-time high of approximately $69,000, analysts such as Stock Money Lizards predicted that Bitcoin would reach its highest point sometime in the latter half of the year 2024. This is consistent with the typical correction that Bitcoin experiences whenever it reaches the end of its cycle. It has been observed by other traders, such as CryptoChase, that the price of Bitcoin has significantly exceeded its long-term exponential moving averages, which is a well-known indicator of a decline in the price of the cryptocurrency. In addition, bearish divergences are appearing in market indicators such as the Relative Strength Index, RSI, which indicates that momentum is beginning to weaken. A significant number of short-term traders are of the opinion that the risk-reward ratio that is currently in place is no longer favorable, and their attitude is shifting from one of excitement to one of caution. Despite the fact that institutional investment continues to be an essential pillar of support, this is still the case. A period of cooling off may be approaching, even though it is possible that a significant crash is not imminent. This is because the market is becoming more cautious, which suggests that a period of cooling off may be approaching.
Total global liquidity, new all-time highs. It broke out, keeps doing this wedging pattern. That breakout always works. Why does it matter? Total global liquidity is 90% of the price move of Bitcoin since 2013. 90%. So all you fuckers using other stuff, it's like it's this and that, and none of it is true. It is liquidity dominant, and then it's network adoption effects, which is the excess returns. So if global debasement is 8% a year by total global liquidity, that's how much it rises every year. That's how much they're debasing global currency, global fiat. The excess performance is network adoption, which is about 100 and something percent a year on top with Bitcoin. When it comes to NASDAQ, well, it's 95%, and it varies between 95 and 97% correlation. The excess return is the adoption of the new technology. So in the adoption of the new technology in NASDAQ, which does about 18% a year, versus Bitcoin that does about 150% a year since 2013, tells you that the supermassive black hole is to own crypto. I know many of you in the stock market can't get your heads around it. Many of the people in the stock market can't get your heads around the NASDAQ being so high. It's all driven by debasement. It's what matters the most. Okay, business cycle, the other big driver. We are so far behind today, but I want to give you some pure alpha here. That's my job, and I enjoy spending time with you guys, having a drink. So cheers. I feel like Keith Floyd. Those of you who are English remember Keith Floyd. That's what I feel like right now. Okay, business cycle. The dollar being in the range for a period of time kept the ISM subdued. The ISM, the Institute Supply Manager Survey, is the best guide to the business cycle. The business cycle above 50 is growing. Below 50 is stagnant. Below 45 is below 47, 46 is recession. So we've been crawling along. And those of you who run businesses in Main Street, you own a store, or you deal with ordinary people and ordinary things, manufacturing industry, stuff like that. You know that business hasn't really picked up yet. For all of us who have earnings, you kind of know that earnings haven't really picked up yet, but tech companies and stuff have, because they've got a technological revolution going on. They're attracting capital, but generally the rest of us don't. And so it's been a bit weird where the markets have gone higher due to liquidity and earnings haven't. That's typical. That's why P ratios go out, because of debasement. The rich get richer, the poor don't. But eventually, the dollar is one of the markers of this, one of the key drivers. The other is rates. They've always been sideways. Now the dollar is weakening. It sets yourself up for the business cycle to weaken. The dollar is not always the key driver of the business cycle, but it's one of the key drivers at turning points. Bitcoin has been priced on ISM. So implied Bitcoin pricing and ISM. So Bitcoin is priced for a weak business cycle right now. But guess what, children? Our financial conditions index, which is the dollar, rates, and oil, screaming higher, and it leads ISM by 9 months. And that tells us ISM should go up a lot. So that means you guys are all going to start earning a bit more money. Your businesses are going to do a bit better. You'll feel a bit better. I think rates will lower a bit somewhat as well. And overall, the global economy will get better. There'll be more demand for risk assets. This is what drives alt season. As this all picks up, this is the dominant driver of the whole thing. It's also the same driver of Rolex watches and NFT prices, art itself, also driven by the business cycle. That all lies ahead. I know it doesn't feel like that now, but that's what's coming. You say we can never have an alt season again. You can't have an alt season really with the ISM below 50. Once it goes through 50 on the upside, you get alt season. Why? Because people have disposable income and they end up investing further out the risk curve. Happens in small cap equities, happens in emerging market equities, happens in all sorts of things. It's the same risk curve. It's all to come. So just have patience with this. I think it's started, and we will see a dramatic shift in what's happening, particularly after the tariffs get agreed. And what we find is people stop freaking out about oh my God, they're putting a gazillion percent on China, and China's going to put gazillion percent squared on the US, and we're all going to die. None of that's true. It's just negotiation. They'll get somewhere sensible. Chinese will end up buying treasuries. They will stimulate their economy. They will help stimulate the global economy, and others will do the same. It is all fine. It's all working according to plan. And those of you who think it's not, Bitcoin hit an all-time high today. So of course it's going to plan, but your alts aren't yet. And so therefore you are miserable. And that's because you've made the wrong selection so far. Some of them have done really well, and we'll come on to some of the charts in a bit. But generally speaking, the space looks amazing right now.
A new upswing has occurred across the entirety of the cryptocurrency market, despite those who are concerned about an overheated rally in Bitcoin. The total market capitalization of cryptocurrencies reached $3.48 trillion, marking the highest level since February. This was achieved by a 2.5% increase in the market capitalization. Bitcoin, the most popular cryptocurrency, shattered all previous records and reached an astounding $111,888 before it was stopped. As a result of the market's increased confidence following this breakout move, leading alternative cryptocurrencies such as Ethereum, Cardano, and Solana experienced robust upward trends at the same time. This resurgence in momentum is being driven by a multitude of factors, most of which are of a technical and macroeconomic nature. The recent downgrade of the United States debt by Moody's has caused traditional assets to lose some of their credibility, which has resulted in cryptocurrencies becoming a more appealing hedge options. There has been a reduction in the level of geopolitical tension between the United States and China. Additionally, the depreciation of the United States dollar has resulted in an increase in the attractiveness of cryptocurrency assets that are denominated in dollars for investors from other countries. All of these factors are coming together to hasten the flow of capital into digital assets, which is making cryptocurrency a more appealing alternative in the face of the uncertainty that is occurring on a global scale.
But you're still in the excess fear zone. People utterly freaked out over the Trump tariffs. So NASDAQ percentage of stocks trading with an RSI lower than 14 hit levels from the Lehman Brothers crisis, the Russian default trade, the COVID thing, right? People freaked out because the newspapers exacerbated it because they don't like Trump. And so they did that. I'm not a political person in this. I'm a pragmatist. I observe and try and make decisions without being driven by the emotions of what newspapers are trying to tell you. But everybody got caught up in that. But now the markets have turned. The investor intelligence survey, percentage bullish, is still ultra low. Professional investors and hedge funds were still massively underweight going into this week. So we've got the fuel and the kindling. It was the retail investors, and God bless you all, because you guys have been more right than the professionals, which is my base case. The hive mind massively outperformed the professional investors. The hive mind nailed it. They bought the lows in size. Professional investors left by the sidelines. That movement is only going to continue. It's what we do at Real Vision. We're going to massively lean into this once we launch our new platform iteration, which is a huge change, and it's going to be mind-blowing. That comes sort of end of June-ish. That is going to really lean on the fact that you guys collectively are the smartest people in the world, not the hedge fund managers. They've underperformed you all of the way. So you guys be you. Individually, yeah, we make some mistakes. If I can get you all to make less mistakes, between the fact that how smart you are, you will actually get together, learn, collude together, form cabals together, and before you know it, we're going to produce amazing returns. Now, cabals, I'm talking about just communities as opposed to people in the know. Okay, so freak out time. This looks very much like an amazing time in my career, which was I was at Goldman, and it was the Asian crisis, and I was running the hedge fund sales desk. I was understaffed, and it was the most incredible time because everything was imploding. The banks were imploding. Every hedge fund was on the trade. It was a very exciting time. We started to learn about the words deflation, debt deflation, stuff like that, that rolled into global markets later. But that, I remember how bad it felt. It really was the end of the world scenario. And what we've done is exactly copy that. Amazing. And I think the outcome is the same. Now, whether we go into, I don't think that the 99-2000 analogy is right. I do think we have a massive blow off top bubble cycle. I think that's 29, 30, something like that. And then as the world changes with the economic singularity, I think it becomes much more difficult. And maybe there's more downside for markets if they stop debasing currency. But we'll see. Let's not worry about that. Don't read into the chart. Oh my God, it's 1999. The world's going to end. The world didn't end then either. But the point being, it should be one-way street from here. Do you remember when you were all freaking out in the NASDAQ? Julian Brigden, I remember who used to be with Pro Macro, was like, oh my God, it's all going to shit. These companies, these tech companies, all these people, tech companies are worthless. It's all going to go to, the tariffs and blah, 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 blah. And we came on and said, just follow Global M2. What you've got is an excess fear gap. People have overly panicked. Guess what? It's caught up with Global M2. Beautiful. Thank you. I was worried this chart wouldn't work, and it worked like a peach. And we managed to buy the lows in that stuff for Real Vision Pro. Technicals. Okay. So these were this morning. I think Julian sent them to me because I was too busy, I don't know, having a manicure and a pedicure or whatever. So Julian sent me the charts before we hit the 110 or whatever we hit in Bitcoin. But basically, wedge pattern breakout, new all-time highs. You've seen it in the M2 chart. Great. The other one, Ethereum. This is a beautiful chart. I see the mid-curve bullshit on Twitter about Ethereum. It's all over and blah, blah, blah. It's not. You don't get it. The financial system will build on ETH. It is the Microsoft operating system of the financial world in blockchain. And they'll build layer twos. It'll work out fine. They built excess capacity. And alt season doesn't start until the ISM crosses 50. We're starting to see the base in the ETH Bitcoin cross. I've also said Bitcoin dominance peaked. I think it continues to peak and it falls sharply. And that is what we're going to see here. And once ETH breaks 3,600, it will accelerate very fast. My ETH bet, I don't own ETH outright. I own it via NFTs, which give me leverage. I'll talk about NFTs in a bit. I might do it when we get to the Real Vision platform to add some alpha there because I'm running out of time. We're 50 minutes in and I'm not that bad, right? Normally, I've done 2/3 of the bottle. I've been talking so much that I need to drink faster. And I'm still loving that cheese, by the way. And those crackers are really good. You know, they're almost as good as Spanish crackers. If you take the fucking honey out, Americans, you don't need sugar and everything. Honestly, you don't need to die of diabetes. I know it's kind of fun because all your friends are doing it, but, you know, it's not that necessary.
The growing acceptance of cryptocurrencies by traditional financial institutions is perhaps the aspect of this resurgence that stands out the most. When the chief executive officer of JP Morgan, who has been known for a long time to be skeptical of cryptocurrency, announced that customers would soon have access to Bitcoin products, it was a moment that stood out. This announcement signaled a significant shift in the sentiment of institutions. Not only does this shift represent a change in public relations, but it also represents a realignment of capital flows away from traditional banking and toward digital assets. From a technical standpoint, the rally is being bolstered by the workings of the market. One of the factors that contributed to Bitcoin's explosive breakout was a massive short squeeze, which was triggered by a liquidation of short positions totaling $500 million. In the meantime, the total market capitalization of cryptocurrencies has broken out of a prolonged consolidation pattern known as a bull flag, which indicates that the rally may still have room to run, given that momentum continues. It is possible that the digital asset space is getting ready for its next major growth phase. This is because the market structure is getting better, because macro conditions are shifting in favor of cryptocurrency, and because Wall Street is finally coming to the table.